Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. As always, this membership video goes out just to our members along with alerts during every day. If you're watching this video, you actually get to see it publicly on YouTube about 5 to 10 days after we make these trades. So you can't take advantage of these trades without first signing up for a membership at OptionAlpha.com. And I want to go over a special new membership program level that we've added here at the end of this video. So stay tuned at the end of this video. I want to go over this new very premium advanced membership level that a lot of people have been asking for, and we're just going to open it up right now to about 10 people. So I know it's a very small portion of the list, but we'll go over that here at the end of the video. Now today I wanted to go over the trades that we had for both opening and closing. It was actually a very even day. We had taken off 2 trades for March and then entered a new trade for March and a new trade for April. And in particular, what I want to cover in this video is why we decided to go with the put spread, the debit put spread on IWM versus buying the calendar spread on IWM. And I think it's really important to go over this exact distinction, and it's just a preference that we made on our end about going with the debit put spread versus the calendar, but I want to cover that later on in the video, so stay tuned for that. So first, let's go over the closing alerts that we had here today. The first was on SPY, and I want to go over that one first because I have it up on the charts, but basically what we had is an iron condor that we legged into for SPY for March, and one of the bottom legs was the 174-172 put spread. Now we bought that back today for a 10-cent debit, which is basically about as low as you can get for the March contracts, given that they're still about 25 days out. So on this side of the trade, we made a $37 profit per contract. Now, if we actually go to the charts of the SPY, obviously the SPY has continued to move higher and higher and higher. And it's interesting that we have a huge shooting star pattern today where the market rallied really high up in the beginning of the day, but actually continued to fall at the close. Not a good signal for the S&P and the SPYs as a whole, as you'll notice that we closed right at a massive area of resistance that we've run our head up against many times before. So does this mean that we're going to continue lower? It might mean it. I mean, we're obviously due for a correction. But now that we've closed out the put side of our trade, which was all the way down here at 147, that leaves us with the trade that is in the money currently, I believe, in the 180s, 182 to 183 or somewhere in there is our call side of the trade that we still have that's in the money. But again, we have a lot of time between now and March expiration, and the market needs to be a little bit cyclical. So we're going to take advantage of what the market's given us on this iron condor and leg out of the iron condor by getting rid of the put spread, which we did today, and then just leaving the call side trade on. Hopefully we'll get a nice move down in the S&P and be able to trade out that side of the trade as a whole as a profit. So that was the closing trade that we had on SPY. On COP, what we did is we actually bought back a debit credit put spread that we originally had. We originally had the 62.5 60 put spread that we bought back today, again for about as low as you're going to buy these things back, given that it's a little bit wider spread. You see it's a $2.50 wide spread. We bought it back today for 15 cents as a debit, so we made a nice $47 profit on this trade as a whole. Again, as with everything that we do, when we buy back a lot of our strategies at the beginning of the month, and this is something that a lot of people start to see, is that during the month we'll start to close out a lot of these trades, and at the end of the month is actually typically where we start to see a lot of the small losers that we haven't closed out during the month. But this is one that we sold the put spread, and you can see today ConocoPhillips moved up much higher on the day. It was up almost 2.5%, a little bit more than 2.5%, and all we did was buy back the put spread that we had back down below the market. So we took advantage of this. We made more than 75% of the potential profit that we could make on this trade. So there's no sense in letting ConocoPhillips ride all the way to expiration for another 15 cents of premium when we've made $47. We're not going to let this thing go all the way to expiration and possibly continue to trade lower or whatever the case may be. We've made the vast majority of the money we can make on this trade. So go ahead and close out this trade and move on to the next one. All right, one of the opening trades that we had here today was EWZ, and this is one of those emerging market ETFs. I think it's Brazil, and we actually sold the debit or credit put spread for the 40 39 puts, and that was to take in a nice big credit of 28 cents. So almost about 1/3 the width of the strikes, which is usually what we target for these credit spreads. And that would have taken us to about a 30-cent credit. So we got a little bit less than that, but got all of our 6 verticals in there, which is really what we wanted to do here. Going over to EWZ, you can see that EWZ's implied volatility was continuing to stay high, and it's up here in the top left-hand corner of your screen. Right now it's at the 60th percentile, so that's definitely over the magic 50th percentile that we talk about, that we actually have inside of our membership platform, the ultimate strategy guide that's in there, that's interactive. You can go in there and see what strategy works at what different implied volatility percentile. But since the implied volatility percentile is over that 60th, we felt okay to go ahead in here and sell some sort of premium. Now we decided to go with the put side of the trade only because our portfolio right now is a little bit heavy on the bearish side, and rightfully so. We think that the market is a little bit overbought or a little bit frothy here and could continue lower, or at least is due for some sort of small pullback. So that being said, we felt okay going in here with a debit put spread to start to add at least a little bit of positive delta to our portfolio going forward. So we went in with the put spread vertical that's below the market. Now I want to go to the actual trade tab so you can see where our probabilities are for this trade. Now again, we trade these contracts. These are the March. Implied volatility is very high. There's no need to go out to April for these. 25 days is plenty for this type of trade. And you can start to see that we're already down about $12 on the day, and this is our actual live position that we traded with the actual live pricing at 28 cents as a credit between that. So the market has moved down from when we traded this thing today, so the implied the probability numbers are a little bit higher than what they were, but they were right around 35% probability for that first strike, which is at 40. So we're about 75 cents away from that right now, but you'll see that the probability level right now for those 40 strikes is right about 42. Now we took in a credit of 28 cents, so that actually moves our break-even point down to around 39.70 or so. So you can kind of extrapolate this probability, and we're trading right now at about 35% implied volatility, which would mean that our credit should be a little bit higher should we enter this trade right now. So when we actually made the trade, the probability of the 40 strike being in the money was around 35%. So that made our overall probability kind of, again, extrapolating with in between where our break-even point's about 30%. So that's where we trade this. It was a 70% chance of success trade from when we entered it originally today. And again, we keep our trade size small. We can let this thing go all the way to expiration if need be. It's a great volatility trade. It adds some positive delta to our portfolio. So really there's nothing else we can do better than enter these types of trades all day long. All right, the last one I want to go over tonight is this IWM that I talked about before. So my big issue with IWM today was that the whole market has been trading higher, right? And wanted to take advantage of that. We're already very delta negative in our portfolio, but that doesn't mean that we can't still add these good trades to our portfolio, the bearish trades that we know we should be adding. And so I was contemplating either doing a debit put spread or a calendar spread. And I've done the calendar spread before, and we had a nice big profit on the calendar spread last month, but I just didn't think that the pricing and the volatility was where it needed to be. So I wanted to go over that tonight with you guys. But let's talk about the trade we made. It was the 117, 116, so only $1 wide vertical put spread, and we paid 45 cents in debit. So actually we paid a little bit less than mid price for this. Really, really great trade. We've got a lot of opportunity here to make money, and it goes all the way out till April. So we're giving ourselves a lot of time to actually make money on this trade. But why didn't I go after the calendar? And the reason is because with a calendar, we really want implied volatility to be super low. And we're talking into the teens. The last time that we traded a put calendar on IWM was up here near the highs, and implied volatility at that time, I believe, was down in the low teens. So it was around 12, 13 percentile implied volatility. At 33%, it's still not low enough to trade a pure calendar. Now, I was looking today about the 113s, and that would be a good move down. 110 would be a little bit too far, but 113 would be a fairly decent move. And if we actually see the market continue to rally up here and volatility drop into the low teens for the percentile, then we might consider doing a calendar on something like the DIA or the SPYs or the Qs. But we already have some exposure now to the IWM and the Russell in general, and you can see that it's just really due for a big pullback here. And really all we need, given that we traded just a single vertical put spread, is for the IWM to close and move down anywhere below where it's trading right now between now and April expiration, which is really, really far off the graph. So we're giving ourselves a lot of time for some sort of market cyclicality to come in, and as soon as it moves down below this level, then we have an opportunity to take profits and get rid of this trade with a win in our column. But again, I think that the overarching idea here in trading the debit put spread versus the calendar is that with calendars, you really want implied volatility to be below the 50th percentile for sure, as we talk about in our ultimate strategy guide, but you really want it to be down into the low teens. The calendars really take advantage of that second month or long month expiration where we see a big jump in implied volatility. That contract is going to see more of a move in implied volatility than the front month option is for sure. So you really want to trade these in super, super low periods of implied volatility. And right now for the IWM, I just don't think it's that low to be able to trade those calendar spreads. So again, hopefully you guys really enjoy these videos. What I want to cover just before we go here at the end of the day is that we added a new premium membership level to our website here. And I want to talk about that with just you guys first, because obviously I appreciate you guys who are already subscribed and then on the 7-day free trial. We're not changing right now anything in pricing for our basic membership, which everyone is a part of right now, unless you're on the free membership or free 7-day pass. But what I want to talk about is this premium membership that we've added, and it is very expensive, and rightfully so. And the reason is because I'm only limiting it to 10 people right now. So only 10 people are going to be able to join this premium membership. It's $497 per month. But here's the real value is that you get one-on-one weekly coaching calls with me for an hour, plus a live webinar with everyone who's part of this kind of mastermind power options trading group every single month. And I actually might start doing those every week, but I just want to start out with monthly. As soon as we get 10 people on this, we'll start moving it closer and closer to a week where we do a huge live webinar strategy with just those people who are part of the program. Not only that, but you also get priority email and phone support. So now just instead of just having email support and asking questions about just trades that we make, you can actually ask questions and strategize with me directly on the phone with trades that you're making that are not part of the membership side of our site. I know this has been a huge question that a lot of people have is, I get tons of emails from people asking about trades that they make personally, and I can't possibly answer all of those. Now with just these 10 people, I'll be able to focus a lot of time and energy into answering those questions for just your trades, even if they're not part of our membership site. And again, that's why I'm limiting it to 10 people, because I want to give each of you the opportunity, if you're part of this program, to have my full and complete attention. And I think right now that is limited to just 10 people. And then finally, we're going to do a customized trading plan. So you're going to work with me one-on-one to take a look at all of your information, your finances, your portfolios, whether it's a Roth, a margin, etc., and create a customized step-by-step trading plan that you can use to start generating income. And obviously my goal with this whole system and this whole new strategy and membership level is that you generate enough income to pay for the premium membership as long as possible. So you stay in the program as long as possible. We generate enough monthly income net of commissions to pay for the membership and make it pay for itself. So that's the new program that we're releasing today. It's live on the blog. It's not going out anywhere else right now until we do some promotion for it, but I want to give you guys an opportunity to sign up for it. As soon as the 10 people hit this, we will take this premium membership down and there'll be a waiting list. And then as people start to fall out, we will add people back in. So again, I'd love to get your guys' feedback on what you think about this new program. It is pricey, but you do get a lot of attention and one-on-one support with me directly. And I think it's well worth the value that we're offering it here tonight. As always, please add your comments below this video and happy trading.